Can the major equity benchmarks move significantly higher in July without NVIDIA? The answer is yes. I'm Dave Keller with Market Misbehavior. Today we're going to talk about how some of the top performing names like Super Microcomputer and NVIDIA are actually well off of their all-time highs from not too long ago. Why the breadth conditions right now speak to continued uncertainty as we go into one of the seasonally strongest months of the year, going back to the 2009 market low. And I'll share with you the three leading mega cap names, the MAG stocks that you absolutely should be focused on to gauge the upside potential in this continued bull market phase. Before we get to those charts, here's one more thing I want to tell you about. Today's video is brought to you by Seeking Alpha's Alpha Picks. The Alpha Picks product is essentially an institutional quality alpha model or quantitative model. What you do is you look at the characteristics, the factors that describe a stock just before it really starts to do incredibly well, and you look for those historical winners and try to back into what you could have identified before they really started to grow. They look for those same powerful combinations of factors in the markets today. One of the stocks that they highlighted back in November of 2022 was a smaller company called Super Microcomputer. That name might be familiar because it's gone on to become one of the top performing names of the S&P 500 in the first half of 2024. They are now looking for the next Super Microcomputer, those next big compounders that will have periods of potentially explosive growth. If you go to marketmisbehavior.com/alphapicks, you can have access to an institutional level model like their Alpha Picks product. Now, it is in an affiliate link, which means it gives you a better deal than you would have normally, and also helps me to make Market Misbehavior awesome. So if you go to marketmisbehavior.com/alphapicks, you can find more information about the special deal that they're running around the 4th of July holiday. I hope you can check it out and help identify one of those next big winners. Now let's get back to the charts. So despite some meaningful pullbacks in April, again in late May, and arguably this sort of choppy period we're experiencing here in June, going into July, the S&P 500 testing new all-time highs, and it's been driven by some of the key names out there. As a matter of fact, you can actually look at a performance table here on StockCharts.com looking at the top performers in any list. So here we're looking at the S&P 500 members, so all 500 stocks, and then rank ordering them in terms of their year-to-date performance. Let's look at some of those top performing names and actually look at what's happened recently. Super Microcomputer, up almost 200% year to date. NVIDIA is number 2, up 150%. Vistra Energy and Constellation Energy are two utility stocks that have actually done quite well. A lot of that fueled by sort of the AI trade. I think a lot of people are assuming 118 and 73% for those two. Then we have Eli Lilly up about 57%. You can see a bunch of names up in the 30-40% range here as we go to the top 20 performers in the S&P. Now here's the thing, when you see something that's up 150, 200% year to date, you probably assume that those charts look like Eli Lilly, which has been, currently incredibly strong, right? Had a consolidation in the first couple months of the year, but from April on, it's been lights out strength in May and June. And even as we end the second quarter, Eli Lilly making another new all-time high and just appearing to have no pause in the uptrend. The reality is a lot of those top-performing names don't look like Eli Lilly. They look more like Super Microcomputer, which actually made its all-time high in March, down quite a bit, still up a ton year-to-date, but it's pulled back a little bit here recently. NVIDIA, which has had a rough couple weeks. Now, again, we made a new all-time high on an adjusted basis, around $140 a share, and I know that doesn't look like a big move, but if you actually look at the movement, look on the far left of my screen, that's about a 17% haircut over 2 days from that peak to that valley. So the problem with some of those names that have had exponential runs, like a Super Microcomputer or NVIDIA, is that when they pull back, they can pull back just as quickly as they rally it. So the unfortunate situation is some of those top performing names, there's no guarantee that they will continue to stay in a position of strength and look like an Eli Lilly. Eli Lilly is good until that trend breaks, and then it's a bit more of a concern. The reality is, if you look at the breadth conditions here going into July of 2024, the breadth is mixed, right? The long-term breadth conditions, right? If you look at the general trend in the advanced decline data, it's fine. If you look at the McClellan Summation Index, which is a good long-term measure of breadth, firmly in a bullish configuration. We're currently around 70% of the S&P 500 members above their 200-day moving average, which means we've had choppiness, we've had noise, we've had a bit of volatility, but overall stocks are still generally remaining in a primary uptrend. But if you look at the bottom series here, these are the percent of stocks above their 50-day moving average. It is actually very mixed. As a matter of fact, at this point, at the end of June, it's literally a coin flip, about a 50-50 chance. If you pick a random stock in the S&P 500, whether it's above or below its 50-day moving average. So that certainly doesn't seem like a bullish setup to me. Breadth conditions are arguably sort of mixed depending on what time frame you're looking at. So what do we do in this environment where you have the indexes at or near all-time highs? You have some of the top performing names that have pulled back. Now where do you go? I would argue you want to stick with strength. And in general, charts that are going up, I think, are innocent until proven guilty. You wait for them to break some sort of meaningful level. You wait for them to show real signs of deterioration before you would consider them no longer working. And the reality is some of the biggest names, we showed NVIDIA, but if you look at others like Meta, Amazon, Alphabet, Microsoft, these are stocks still showing quite a bit of strength. Many of those making new highs this week, others testing or threatening to do so. So I would argue the three most important charts to watch going into July to see if our major benchmarks can keep going higher. I think it's the MAG stocks, Meta, Amazon, and Alphabet or Google. Let's look at each one of those individually and talk about some key levels and patterns that we're observing in those names, what to look for here in July. So with Meta, you have a bucket of stocks that, while they've done quite well in May and June, coming off of an April low, they still haven't made a new high. And while charts like NVIDIA, of course, made a new all-time high in June, companies like Alphabet have already broken out. Names like Meta actually still have not broken to a new high that they first established in Q1. So if you look, Meta actually made a peak right around, we'll call it 525 here in early March, retested that same level of resistance here in early April after a gap lower, which looked really concerning at the time. But look at how that gap day was the low of the period because buyers just came in and were thrilled to buy more and more Meta, pushing that stock back up to retest resistance yet again at 525. So I think the question for Meta in July, can we get above 525 and stay there, right? It's not enough to trade up to resistance. We need to trade through resistance. And it's not just enough to do it on one day. You need additional follow through. You need signs that investors are willing to pay more and more for Meta than they've been willing to pay so far for the most part in 2024. So with Meta, can we get above 525 and stay there? Second chart would be Amazon. Amazon looks kind of like what I would hope Meta would look like after it breaks out, right? You have a chart which stalled out, had an incredibly strong run from the end of 2022 really through April of 2024. It's been a particularly strong name with some pullbacks along the way, but nothing to be horribly concerned about. As we keep going higher and higher, you can see we set a peak here around $190 a share in mid-April. We retested that resistance in mid-May and then pulled back again. And look at how the support level right around 175, pretty meaningful. We did dip briefly below there for one day, but you see we closed back at the highs and the next day we popped right above there. So I think of that 175 level as kind of the level, right? As long as we hold that, this is still a pretty constructive chart. But what's happened in the last week is we have finally broken above 190 a share. Now we're showing some weakness here to wrap the week. And overall, I would say after you have a breakout, as I mentioned with Meta, it's not just breaking out, but it's following through. Do you see additional buyers willing to pay more than $190 a share, ideally more than $200 a share for Amazon? Because to fuel that next leg higher, you're going to have to attract a lot more willing buyers that are interested in pushing that price onward and ever upward. So with Amazon, I think the question is, can we hold the breakout level of 190? Chart number 3 to finish out these MAG charts would be Alphabet or Google, right? And when you look at Google, actually, it's probably the strongest of the bunch in terms of consistent new highs. And I would say while Meta, you're looking to see if we can break out. With Amazon, you're looking to see if we can hold the breakout that has already occurred. I would say with Alphabet, it's continuing this uptrend, right? So charts like Alphabet remind me a lot of the chart of Eli Lilly that we looked at earlier. It's kind of this nice, strong performer. Really hasn't had a meaningful drawdown in quite some time. In the case of Alphabet, Alphabet, we last had a pullback end of January to early March. Now, that was a big pullback to the 200-day moving average, but from there we've moved quite high. And from the March low, you can actually see we've had an incredibly consistent uptrend of higher highs and higher lows. So the question for a chart like Alphabet, can we keep making new all-time highs when we push higher? When we pull back, do we keep making higher lows? And I would say with Alphabet, that's the key question. We're going to pull back. We're going to have brief drawdowns. Can we keep making higher lows? Because if you go back, you can see each one of these pullbacks keeps getting higher and higher. And that is the mark of a leading stock still strongly in an uptrend, is we make higher highs and higher lows. Another thing I would say with the chart of Alphabet to wrap up is we popped above an RSI level of 50 here in early March. That's right after we bounced off of the 200-day moving average. And from there, the RSIs remained consistently above 50. So can the momentum, can the RSI remain firmly in that bullish range? So there we have the MAG stocks, Meta, Amazon, and Google, or Alphabet. And I think watching those three charts, each one of them similar in terms of they're showing long-term strength, but very different in terms of whether they're testing a breakout like Meta, already confirming a breakout like an Amazon, or trying to maintain a consistent uptrend like Alphabet. I think whether the three of those are resolved in a positive way, I think that could be the question to answer for the markets in July of 2024. Do you agree with my assessment? Do you like those three names? And which one would you think is the best opportunity here? Let me know and drop a comment below and give me your pick. For Market Misbehavior, I'm Dave Keller. Have a good one. We'll talk to you again soon.